Hi, folks. Basil, Chapman, Tiger Technicians. Oops, it wasn't a Tiger. It was Tom O'Brien show. Just a habit because every day I do the Tiger Technicians hour, 11 o'clock till noon. Sorry. It's my pleasure to be right here. Tom O'Brien show. And Tom's away, and it's my pleasure to be here. And we're looking at a very interesting market. Dow's down 85 at 17,949. The S&P's down 3 at 2,097. The comp index is up 1950 at 5,014. You've got gold at this particular point. Gold is up $7 at 1,200. You got silver up a little bit at 15.96. Bonds are down 11.30 seconds at 163 and 14.30 seconds. Dollar is up 0.03 at 97.97. And we've got copper. Where was copper? Copper is down at 2.70. We've also got earnings. We've got CMG earnings, and we were doing that just before the end of the last hour when I was on. And I was talking about CMG, and I said, we finally got leg D. What does that mean? Well, in the Chapman wave methodology, there's a very simple technique I have. Let me just pull this across here. It says, I've even written it in here. It says, from the lowest, most identifiable low bar, merely count each successively higher peak. If you're going from a buy signal to a buy mode because the pattern is very strong, you should be able to go to a peak A, a second peak, which I call peak B, as a third peak, peak C, and at peak D, other things can happen. It doesn't mean to say you should get the sharpest decline, but that's very often where you could get the sharpest decline or a recycle higher. Well, lo and behold, I did this analysis just a short while ago. I said Chipotle CMG had made a peak D on the 23rd of March at 692.43. It pulled back to where? To the 200-period moving average, that dotted line that I'm showing right there. The left side is the daily chart whenever I show my charts. The middle one is the weekly, and the right one is the monthly, and I've just included here the 120-minute chart. So you've got 4 time frames, and what we're looking at is it pulls back to 644.06, turns around, the stochastic and the MACD start to rally strongly, and it goes peak A, pulls back, doesn't break the low, and then boom, some news event takes it higher, and it gaps higher, and it goes to a leg B, then a peak B, a leg C and a peak C, all underneath the previous high, and then boom, today it spikes over that previous high and goes to what? Leg D. And what I was discussing moments ago was that everything about this chart says that you got to be somewhat careful because it's a pattern. It's not one of my favorite patterns, but it's a pattern that I respect nevertheless. It is a head and shoulders pattern. And on the left, you've got the left side shoulder. In the middle, you've got the head at a peak D in the weekly chart. So now we've got 1D in the daily, the last leg up. You've got a peak D in the weekly, and you've got the right shoulder over there. And this pattern says that if you were to break down under the 9-period moving average, you've got to be real careful because it could continue much lower. And if it was to bounce up, then you would get maybe a cup formation trying to retest the previous high. But I said, I'm a little nervous about, well, didn't say I was nervous. I said that I'm a little cautious in the outlook here because it looks to me, based on the monthly chart, the way the pattern's forming here, that there's very limited upside, could be down. Well, lo and behold, earnings come out, it's down 28, down 4% at 659. 659 takes it right to there, to the gap. Isn't that funny how that works? You know, Tom always talks about how gaps get full. Look how that gap is going to probably be full tomorrow morning. We'll see. They've still got to, there's still the conference going, you know, other things happen. So by 9:35 tomorrow morning, we'll know what's going on. Everything else is just noise. It's the way it prints. It's the response to the news that's most important. And the monthly chart says that there could be a hat trick top if at some point in the next 3 weeks, CMG, Chipotle Mexican Grill, takes out 600 as key support. If it does that, you've got something that's going to be time and price to the downside. So I'd be watching this real closely. All right. So a couple of things here. You see these patterns that we're looking at? The way they're letters, the way you can talk about a double top at 727.79 the week of the 9th of January, and then all of a sudden it retests and it goes to 726.98. Just, what is that, a point, less than a point higher, lower that is? Those are double tops. Those are very important in my work. So what we're looking at here is the chance that Chipotle might be, it could come back by later tonight, or it could come back tomorrow, but it's saying there's a certain vulnerability here in the chart formation, and it's how it prints. That doji candle right there is going to be big, because if it closes under the low of 682.63 in the next 2 days or so, without making a new high, it says, be careful. Chipotle has limited upside at this point, but probably going to start making lower highs and lower lows. So you always want to trade. If, for instance, if you had an option and it was down 34 at some point just a little while ago, you can't do anything after the market closes. That's the lousy thing about options. They are fantastic when you can use them in a different way. But when you are stuck and out of the blue, you've got a fantastic paper gain. By tomorrow morning, Chipotle could be doing anything. You just don't know. It's the response. It's the outlook. It's a whole bunch of things that are going to be going on. But the pattern itself says it's getting very choppy. Something's going on. I would not be surprised if there is a bit of a slowdown in sales. Okay, now let's look at something else. We've got Amgen. So Amgen comes down, part of the IBB, part of the NASDAQ biotech sector. It's at 172.65, up 666. 172.36 was the last high. So it's printing right now, not at an all-time high. The all-time high was 173.14. But that, in fact, is the same situation. What you want is to find out what they're going to discuss, what the outlook is, what they have on the drawing boards, a whole bunch of things. It's the price action tomorrow that we'll be looking at to see, is Amgen telling us that, in fact, this is the final hurrah, and it's spiking to an all-time high with really good news, and from now on, the news is not going to be quite so good, or is it just merely business as usual? Biotechs are doing amazing, and this is just a continuation of that pattern. You'll only know tomorrow at 9:35 when the market opens, and we'll see where Amgen is trading. It could be up 16, could be down 10. You just have no idea as to what is going to go on. Pattern-wise, there should be a test of that doji candle with a long-legged doji with a close of 170.10. That's what you would have expected going to a possible leg D, but it can fail under the previous high. It's an unusual G, but we're going to be watching this closely. This pattern of the cup formation says that if you break out above it, there's a really good chance you're going to come back and test the lip between the lip and the last moving average of importance. In this case, that is right here at 162, and that should happen over a period of 3 to 4 weeks. I don't know if it's going to happen. I'm just saying that this particular pattern with the cup formation very often produces yet another cup formation. All right, we'll watch this and we'll continue here. So now there are a couple of things I was asked about. But before I do anything else, I want to discuss something, and I'll come back to it a little later on. The VIX index. The VIX index is trading at 13.25 at the close today. It got repelled by the 9-period moving average, that black line of 13.46. These are the numbers I'm watching. If on Friday, at 4 o'clock this Friday, if the VIX index is trading anywhere in the high 13s, we'll be watching 1422, because a close above that 1422 level will be the first time the volatility index has closed above the 9-period exponential moving average since it did that for 1 week back in January the 30th of this year. It went to 22.18, couldn't hold it. The next week it closed under it, and after that every single week it closed underneath it. It closed it right on it 1 week. That was the week of the 13th of March, but it was just on it. It wasn't really above it. And the MACD is not very good, but it's starting to flatten out. And if you look at the histogram, now I'm going to be talking about some of these things. I'm going to be doing two consecutive weeks of workshops. Let me show you right here. This is the my opening call. You'll get my opening call as it's only open to subscribers, but if you sign up for a free trial for my opening call, you'll be able to attend that webinar, the last one I had back on April 19th. was on the 1929 market. The match between now and then doesn't mean to say we have to crash like a depression or anything, but it says be careful. And we're going to be looking at the essentials of the Chapman wave methodology. I'll talk a little more when we get back. Basil Chapman sitting in for Tom O'Brien. This is the Tom O'Brien Show. My pleasure to be here. I'll be right back.